Good morning, good afternoon, good evening. Welcome to the slightly late running. My apologies. The slightly delayed Bull versus Bear webinar. Steve Miley on the call for trade day on Thursday, the 29th of September. Welcome, everyone. We're going to go for our usual regular run through in here today. Calendar, what we've had, what we've got coming up. We'll take a look at the articles from the major news wires and then a quick whistle stop tour around the what was I going to say around the charts. It will be brief today, guys. So I'm going to be wrapping up in about 15 minutes time. So apologies if I get through this quite quick. There's nothing really new. All the same negative stuff that's been hitting the markets is still there. So let's take a look at what we've got and what we've had. So various ECB speakers this morning, no significant impact from that. We do have German CPI. That could be important. A lot of the time, this number comes in slap bang on expectations. So, but watching out for that. Remember, Germany is the powerhouse of Europe, having a lot of issues with respect to the higher energy prices. So we're going to be certainly watching that because that could have an impact onto European stock indices and then a knock-on effect into the US. So that comes in 43 minutes time at the moment. So German CPI, watching out for that. And then we get US GDP. Now, obviously, GDP is very much top line numbers in a lot of ways, but then in a lot of other ways, it's not that important. It's very, very, very backward looking. This is Q2 GDP, right? Q2, right? That seems an eternity ago. So a lot has changed since Q2. So very backward looking. I'm not too worried about that. That rarely has a really significant impact on markets. A bigger picture is important, but on a day-to-day day trading scenario, it's not as significant. If we look at as well, we've got Canadian GDP just as a heads up as well. Further Fed speakers today. Bullard at 9:30 Eastern, Mester at 1 o'clock Eastern. So watching out for those as well. And then on the overnight, we've got the PMI data start from China in here. So certainly keeping an eye on that. So it's a relatively light calendar. German CPI probably trumps GDP in here, US GDP, on what's going to be more important. And so we've got that coming up in 42 minutes time as of now. Right, what have we got going on? Well, the focus has still been to some extent on the ongoing crisis from the UK, self-inflicted. There's nothing like kicking a country when it's down, right? So the whole world's having an issue with inflation. Our government has managed to just, don't. It's just like it's embarrassing for want of a better word. And you know what? It's not just me saying that. Where's the article I've got in here? So no, that's not the Bank of England. I'll come to the article in a second, but basically, the articles are saying, just all of our own making, and what the hell are you doing, kind of stuff. And people are asking that. Believe me, people are asking exactly that. What is this government doing? The fact that they're only just got in charge is like, oh, don't. I can't even go there. So, but you know what? The fact that the Bank of England came in yesterday. We discussed this. It tried to rescue the bond market. Talking about buying bonds. We discussed all this yesterday, and we looked at the turnaround, right? So bonds did bounce, and they were coming back down again. If you remember when we were on the webinar, we had the initial bounce, and that, remember, this is impacting markets globally. There is and then I've got another article where I'll show you talk about the contagion fears that this kind of scenario could play out elsewhere if other countries start doing similar in cutting taxes, boosting spending. We could get a lot of issues with global bond markets. And there's definitely been a contagion. And then obviously there was the rebound. When the bond market rebounded, we saw US bond markets rebound. So US bonds were being dragged down by UK bonds. And then, and it's rare that, the US bond market, the world's biggest bond market, gets its tail. It's usually the dog wagging the tail. This was the tail wagging the dog. So the UK bond market being the tail wagging the dog being the US bond market. And when the Bank of England announced, we saw the spike back higher. But some of that positivity did follow through yesterday. We spoke about, for me, it all looked very negative. But we got some of the positivity ended up following through. The positivity for the Bank of England stepping in. And we saw a big risk-on move yesterday. However, that's been undone this morning. But as, dust has settled a little bit. And it's like, well, you know what, we're still in the same not great place that we were. So again, in here, so the 5 things to start your day, focusing on, crisis of confidence in the UK. Self-inflicted as well. So I think if I got that link in here, look, the UK's crisis of confidence was years in the making, okay? And it's not being helped by the fact that we've got basically a government that is not united, and the fact that there's a lot of issues within the split in the country as well. So, and this is all post-Brexit as well. So anyhow, not great, okay? New sanctions coming from Europe. on Russia, and Janet Yellen going to stick around. Nothing really important there. Volkswagen are still looking to list Porsche, an IPO. So brave given the state of the markets, but they're still looking to do that. And there's a good little article at the bottom of this. I'll share this. So this is the European version of Thide Things. It's got a good little editorial article in here. About the Bank of England stepping in, and just not great in here. So there's plenty of scope for further fluctuations in here. Let's take a look at, UK's crisis conference was years in the making, self-inflicted, as we say in here. Risk-off sentiment has returned this morning, having had the pop higher yesterday. US futures are down, European equity markets down this moment. So the intervention for the Bank of England, we spoke about that. We had the initial spike higher, then we had a retracement back lower. When we were on the call yesterday, and then we had the follow through on the upside. So bonds going back higher, stocks going back higher, a brief risk on move, but we're back into risk off territory overnight and this morning. Britain's market rout stokes contagion fears around the globe. So I'm going to share that one. This is worth a little read. I read this earlier on. I'm not going to go through it in detail, but those real threat of contagion fears, impacting elsewhere. Wall Street futures resume fall as economic worries weigh. So we're back to the same. BOE ignites global rally in everything from stocks to bonds. So we spoke about that. We got the pop higher before we were on the call. So that was when the announcement came. It retraced a lot of that, and it looked like it was not working when we were on the call, to be quite frank, and I was still quite negative. But then we obviously saw a strong turnaround and a positivity going into yesterday's US session. However, we then saw overnight things have gone negative again. UK cannot afford to look this ridiculous. There's the headline I was looking for. I mean, that's a strong word, right? Ridiculous. Ouch. But it is ridiculous, and these guys would, Liz Truss has been Prime Minister. She was sworn in as Prime Minister like a few days before the Queen died. We're talking a couple of weeks ago, right? Maybe that's what polished off the Queen. I shouldn't be saying that, but the realization that we had these two jokers in charge. So this is the Prime Minister. This is our Chancellor of the Exchequer. He does the equivalent job of what, say, Janet Yellen does in the US. And they were warned that this could happen. They were warned exactly, okay, that this might happen. And lo and behold, it has happened. So, but, they're so new in the jobs, the chance of them going is fairly slim. And they're not going to back, you know what politicians are like, right, guys? They're not going to back away from, they just put this through. If they back away, and that's basically admitting they've made a mistake. So it's doubtful that's going to happen unless unless she fires this guy, unless she fires him. He's like 2 weeks in the job. So gilt chaos was made in UK, but as lessons for everyone. I'll share this one. I had a quick skip read through this in here as well. So some of these are worth reading, guys. You can see these. I've checked before. These pop up in the chat below, right? So below the streaming webinar. So elsewhere though, I'm going to be jumping around a bit. I haven't got these in any kind of order. I was a little bit rushed as I came on, but I'm going to be jumping around. But the other thing that's going on is kind of the chaos in the UK has seen this a little bit ignored, but this is significant, right? So Nord Stream underwater gas pipes are leaking in 4 places, clearly sabotage, right? And but then where's the other one I've got in here? That the Russians are saying that Russia says Nord Stream leak occurred in zone controlled by US intelligence. Go figure, right? There's a conspiracy theory headline if ever I've seen one, but obviously Russia are going to say that. But wow, yeah. So make of that what you will. That one there, but I haven't actually read this one yet, but I will do. So yeah, I don't know how true that is, but there you go. That's what the Russians are claiming. Full fleet found on Nord Stream pipeline, Swedish Coast Guard. So it was 3 leaks yesterday, 4 leaks now, and then so the Russians blaming not the one. Obviously all fingers are pointing at Russia. Sterling is back lower this morning. We've spoken about this as well. We're going back into that negative. Euro going lower as well. With inflation data in focus. That's that German data that I was talking about. So the dollar's back strong in here this morning, and equities are back lower. Eurozone bond yields rise. So we're going back up in yields, down in price again, despite the respite we had. Focus on the UK gilts. And again, on the inflation data, UK bond liquidity improves only slightly. So, the fact that we had a lack of liquidity, a lack of buyers of bonds, that's why they sold off, going up to higher yields. A big sell-off by pension companies, being forced to sell gilts in here as they went lower in price. And you see this morning, the European bourses are all lower. Between 1% to 2% lower. The mid cap. So this is the equivalent of the Russell 2000. So this is the The mid-cap stocks for the UK. So this is the stocks 101 to 350. The next 250 outside the 100, down nearly 2% this morning. But, elsewhere, we've got the German DAX in here, 1%. The French CAC is down 1% this morning. And then if we look at the US, obviously had a good day, nearly up 2% on the Dow yesterday. And good rallies on the S&P and NASDAQ. And we've given back, a good chunk of that today, 1% down on the NASDAQ, and between 0.6 and 0.7, 0.8% in here on the Dow and the S&P on the futures. So all looking fairly negative in here. If I take just a quick nod to the Fed watch tool, this has been oscillating around this kind of area. It's kind of a little getting kind of split between a 50 or a 75, but the money on 75 basis point hike at the November meeting still in here. Let's take a look at the charts. So I'm going to focus first of all we'll start with the NASDAQ this time. So there's the pop higher, a new low, obviously. We did in here manage to eclipse, go below the low in here, I think. No, we actually held. We looked at this yesterday, right? Just held 141.5. The low over here was at 135. So we held the low there on the debt contract and rebounded. Bullish outside day. So all looks fairly positive, okay? When I wrote my reports last night, we were up here. I still hung on to a negative outlook, okay? I'm still clinging on to that negative outlook. If the market does take out resistances, then, I'll shift positive. But at the moment, you went up there, you did take out this, okay, but I think it needs to get higher now. I think it needs to clear these peaks over here to go bullish again. If you're very, very short term in here, you've got a little overnight peak there, but I still think it's got to get back above here, really. Maybe not this spike here from yesterday, but the overnight. That overnight high there, 558, 11,558. It needs to get back above there. Otherwise, back below the low here, it all looks very negative, and you've got this kind of tentative trend line comes up off of yesterday's low through the overnight in here, and you can see we're kind of holding that at the moment. So if you want to get in earlier, it's probably down for 11,400. Otherwise, it's below the low, which is 11,360. Top side, I think it needs 11. What did I say there? 11. The overnight, not the very high, 11,558, and then you got yesterday's high is up at 11,613 and a half. Ultimately, though, I think it needs to get above these peaks over here. It needs to get a much stronger. This one here, particularly, 11,685 and a quarter. That would be the more bullish signal. So you've got kind of a basing pattern. It still looks negative to me. I'm willing to shift that. If you want to put in a more aggressive entry line, you've got this kind of off the very high, and then you've got the high, like the overnight high as well. Okay, so you've got this lower line coming in around 11,515 at the moment. Okay, that's the NASDAQ. Let's take a look at the S&P. Similar story. Obviously, we were already below the low in here from June. Okay, we're already broken below that low. Deeper below that yesterday, then a strong, again, bullish outside day. Should be a turning point. Okay, dipped and rebounded in here this morning. In my report, you'll see us still hanging on to a negative outlook. Okay, but I think, now, if we break back above yesterday's peak, surely, but then what I'm really looking at in here is I'm trying to get rid of some of this old stuff, is the same kind of lines. Okay, so we're looking at this kind of this counter line in here, and then you got the line off the bottom. So if you're aggressive, you go for this breakout. Whoops, sorry. If you're aggressive, you go for the breakout of here. This kind of, and you can see this is not the best trend line in the world, but the fact that it's kind of running up ahead of that trend line since this low was put in overnight or this morning, I think it's important, as soon as it's kind of respected it since, because it's only obviously drawn off of here. So, but it seems to have respected it from there. So down through this trend line, probably down through this low here, this little low here, it will be down through the trend line as well. So down through downside 36.90 and a quarter. But and then obviously confirmed through the overnight low 77 and a quarter. Top side, if you want to be aggressive, there's this little pulls higher here. Okay, I've got that at 37.16. Above there, you've got the trend line comes in around 37.23. You got the overnight high then at 37.36. Okay, so those are the levels, the triggers for the breakout. I'm coming into this still thinking this is bearish. It feels like, so we discussed this yesterday. There was the Bank of England move right from the lows, then it fell. This is when we were on the call yesterday. But then after that, one-way traffic, right? But then we've had a big failure. And if we actually look, I'll just do it on the S&P and go and do your own analysis. But on the fibs, what have we given back? Well, you actually pipped below 50%. So you gave back half, right? So it's kind of clinging to the recovery from yesterday. but certainly questioning it, and I'm still questioning it. I'm more than willing to flip more bullish. I mean, this is a bullish signal. These are bullish signals, right? Not only we're coming from the June lows, or just below the June lows, obviously, yeah, but you've got a bullish outside day, yeah, bullish outside day, a bullish outside day, a lower low and a higher high, and an up day. Yes, that's a bullish outside day on both the S&P and the Nasdaq. Okay, you've had those. So, and that come right off that low. So that's important for the Nasdaq. So it could be a key reversal day, as we say, right? It could be a key reversal day signaled yesterday. At the moment, the market's not delivering that. And if we look elsewhere on the other markets, FX, etc., they're telling us a different story. Let's actually take a look at those other markets. Let's start with FX while I'm on there. So got the big down day yesterday on the dollar. Obviously, we have had a rebound. But actually, dollar's telling us, actually dollar index. If you look at euro looks weak, but dollar index actually down in here. If I go in onto a 30-minute chart, maybe. So this is maybe one to watch, guys. Dollar index is falling back lower in here. If it takes out the low, the overnight low, yesterday's low, sorry, it would look very, very negative. So that's probably that could give us a clue. This is likely to break the low quicker than the S&P or Nasdaq breaks the high. So if we start taking out this low, I'd keep an eye on this, guys. Yeah, the low on the dollar index is 112.45.5. If it takes out that low, I think that could trigger more negativity here, and then that could have repercussions into other markets. Okay, and then the other one is obviously the bond market in here. I'll flick it to the daily first of all. So there's the big rebound yesterday. Remember, it was choppy. We'll zoom in a second after the Bank of England, but back significantly lower today. So this is telling us still negative, right? This is even more negative, I'd say, than the Nasdaq and the S&P. So I think you do need to keep an eye on that. If we can zoom in, 30-minute. You can see significant, but it is rebounding again. You got this, this just looks like the same chart, right? You can just draw the same lines on it, right? It's looking very similar. So keeping an eye on this as well. You've got maybe a potential upside breakout there. Look, maybe a quicker signal coming from here. I'm going to take that off and draw that. I'll do a proper extension on this one. We'll draw off the highs here through this impulse. See that impulse level there? And then I'll extend it out. Okay, so maybe watching that little counter trend line. See this little high here? So on Treasuries, 10-year, on the 10-year, I'll be watching that high there. That is at 112.03.5. Above there could give you a heads up signal into the equity markets going higher as well. So watching that there. Quick nod to the commodity markets. I know some of you guys are looking at those. Let's take a look at oil on the daily. Oil's doing a lot better, so this is telling us a more bullish signal. It believes in the recovery. We'd already bottomed out the day before, actually. Strong up move yesterday, dipping a rebound in here today already. So this is looking a lot more positive. Looks like a base going in now. Yeah. And that dip in a rebound this morning, I think, is important, making a new high this morning. So this is telling us this believes in the recovery. So if you want to be long, if you want to pay a risk-on trade, this will be my favorite one in here on oil. And gold in here, very similar to the Nasdaq chart in here, up higher, and the Treasury chart back lower in here this morning, and we step in. You can draw the same lines on here, off the low and off the highs in here. Yeah. Just throw those in anyway. It takes 2 seconds. So these charts are all looking the same, and it's amazing when we go into these kind of crisis times. You get this high correlation. You always get this. Been doing this a long time, seen a lot of crisis, and you often get when we get these crisis points, you often get markets become highly correlated. You go into big risk on / risk off, and there you go. Look, these charts. If you put up that chart there. If I just flip between these, yeah. So that's 30-minute. This is gold. There's the 10-year. And if we go back to that's not the daily. Let's go to the 30-minute. Correlation's really high, right? All looking the same. There you go. So, but watching from the other markets for triggers, guys, it's really useful, yeah. Because if we're going to get triggers, the one I think stands out there was the dollar. If the dollar breaks down, it gives you the heads up clue. If we get it's going lower now. If this dollar breaks down below the low, it's probably a heads up clue. We're going back into risk on. So watch that. Do keep an eye on that. All right, I'm going to wrap it up there, guys. I'm going to wish you all a great trading day. Stay safe with tradeday.com. And I'll be back with you with the end of a week webinar on Friday. Cheers, guys.